for one rental at a time. This is your daily financial news for Wednesday. I actually forget what day it is, but that doesn't matter. It's the Wednesday for Thanksgiving. Thank you for being here. Let's talk about the 5 things that you need to know today. First and foremost, we are recording this early because, hey, I want to get on with my day in lovely New York City. So we're going to do this quick, and we're going to talk about the 5 things that you need to understand today. Number 1, you need to understand that investors purchased 30% less homes than last 30% less homes than last quarter. Last quarter, they produced 94,000 homes, or purchased, I should say, not produced, purchased 94,000 homes. This last quarter, they did 65,000. What does that mean? What does that mean? What are investors? Why did investors buy roughly 29,000 less homes? Let's think about this rationally together. First and foremost, we have heard a lot about iBuyers leaving the market. There is no question that iBuyers bought a lot of homes in the first half of 2022, and they bought a lot less homes and hopefully very little homes in Q3. So it should not be a surprise to anyone that investors, which iBuyers are included in that category, are transacting less. Second, we heard from Blackstone that they were not buying in, I don't know, what was it, roughly 50% of markets. So yes, folks, the cost of capital rising, iBuyers being very bad at what they are doing, is causing investors to buy less, not only mom and pop landlords. So again, the cost of capital, risk-adjusted return. Again, remember, private equity, Wall Street. Now that you have 4% 10-year treasuries, does a 6 cap really make sense? Again, the Fed is winning, right? Again, I firmly believe that the Fed is winning. The game is not over. Inflation is not beaten. They are just leading maybe at the end of the first quarter. And again, let's wait for the Fed meeting minutes that will come out later today, I believe at 11 Pacific, 2 Eastern. There will be a lot to see in that about how the Fed is bifurcating, right? Who are the doves? Who are the hawks? So again, I'm encouraged by what I'm seeing, but again, the data is supposed to be bad. Yes, folks, you should expect investors to buy less houses. That's why I'm buying at deeper discounts, folks. I'm showing you what I'm doing every day and giving you updates every day. So again, I am encouraged by the drop-off in private equity. I am encouraged that iBuyers are finally leaving. This is all good news. And let's not forget, first-time home buyers, you have less competition from cash buyers. And as we will see in a minute, heck, we'll just jump to number 3. This was going to be number 3, but let's hit it now. Mortgage apps to purchase went up 3%. One of the things that you and I have talked about is I think there is a psychological barrier at 6%. I believe if we get under 6%, like we did in June, might have been July, but I think it was the end of June, we see a spurring of demand. In fact, I think the longer we stay above 6, or if we ever went back to 7, right? If we're there for 6 months, that will just make that 6% threshold a lot different. What is that? Well, it's 6 months ago, 5 months ago, you and I were talking together saying, boy, don't you remember 3%? Don't you remember 4%? The opposite will happen. The average consumer is predictable. Come March 15th, when I talk about the second phase of this housing depression ending, the question will be, where are interest rates? If the 30-year mortgage is sub 6%, I think we start building, right, a return or a baselining. Again, I am not calling for 20%, 10%, 5% appreciation. I am calling for flat, boring for the next several years. And I think a mortgage rate sub 6% in March of 2023 helps us get there. If you flip that over and say, mortgage rates are 10% or 9%, we have more room to fall. I certainly do not know where mortgage rates will be March 15th, but I will certainly be paying attention. But again, mortgage rates have been down 2 weeks in a row. Last week or 2 weeks ago, I believe they were at 7.08. They went to 6.72. And last week, the one that was just reported today, they're now 6.67. So again, coming in, we're down 70 basis points from the peak. So again, I think these are all net positive. Number two, Mark Zandi. Mark Zandi is super negative on housing. It is funny to watch his report from May 2022 to November. Folks, that is 6 months. In 6 months, Mark is now calling for a 10% decline in housing in 2023. He highlights very high, what does he call it? Very high opportunity for negative year over year growth in 289 out of 392 markets. So again, Mark Zandi from CoreLogic, there are 5. It's like very high, high, normal, low, very low. All of these chances for negative appreciation. Mark went from basically saying, there's 25 homes that are very high. He now says in 6 months, 289 out of 392 markets have a very high chance. And for the first time, my market of Fresno, California is in the very high camp. To go one step further, Mark thinks 354 markets out of 392 have a high or very high chance of a negative year-on-year reading. So let's talk about this. I believe what Mark is doing, and other economists like him who aren't in the game of buying rentals, aren't in the one rental at a time arena, they get lost in data. Now, if I were to kind of regurgitate what Mark is looking at, my opinion, Mark is deep into Phoenix, Austin, Vegas. He is then extrapolating the disaster that is Phoenix to the rest of the country. And I believe that is the fatal mistake. I believe, again, flat market nationally speaking. Could Phoenix fall 20%? Absolutely. Could Vegas fall 20%? Absolutely. But I don't see the setup that is uniquely Phoenix with 90% of the other markets. The question for me is how many markets are like Phoenix? That is the big question. I'm willing to sit here and guess 5%, maybe 10%. So let's take Mark's 392. What I'm telling you today is maybe 40 markets are similar to Phoenix, and thus will have disproportionate amount of pain. But that still leaves roughly 350 markets that don't have iBuyers, that don't have California in their bags full of money, that don't have Airbnb distortions. There are some markets that were flooded with investors. See point number one, right? Point number one, investors bought 30% less homes, 29,000 less homes. That's distortion. So where I am sitting and where Mark is sitting is I think Mark is saying, hey, all markets are a deviation away from Phoenix. And I'm here sitting, you know what? Maybe there's 40 markets that are kind of like Phoenix, but then there's the rest of the country. I don't see how a market like, I don't know, pick a market not in Arizona, not in Vegas, or not near Vegas. So again, that's where we differ. But again, we're going to know very quickly. Mark Zandi is saying 10% by September of 2023. And I'm, again, nationally, plus or minus 1, maybe plus or minus 2%, kind of boring for the next 5 years. But it'd be very interesting to see. And again, somebody who has gone from somewhat positive to super negative, I would challenge you to look at the data. I think you were, Mark, letting specific markets distort the country. And I talk to people all over the country, and most markets aren't Phoenix, Arizona. So that's where I come down. Again, we'll know very soon. That's the awesome thing. We have receipts, right? We got this recorded again for Wednesday, the 23rd. I think somebody nicely shared that with me. So again, that was number 2.3. We talked about mortgage. Again, mortgage apps up as rates fall. This is what happens. And again, I just checked this morning, the 10-year note is down again. The 10-year note, last time I checked, is under the Fed funds rate. Talk about the epic inversion. The federal funds rate is a rate charged on overnight lending. It is higher than 10-year money. That's not normal. So again, we have to watch for this. Warren Buffett, obviously known as a stock market guy who buys companies and the like, he is actually quoted as talking about housing. This does not happen very often, so I read the article. Basically, what Warren Buffett looks for is an indicator in housing that the bottom is near. He looks at new housing starts. For Warren Buffett, the sign of a bottom is when housing starts crash. Again, he talks about historically when housing starts get cut to the bare bones, that is a time to get back in the market because again, once you get to that baseline, it goes up from there. I thought that was very interesting. I think we get new housing starts. It's either today or Friday. I forget which day, but it is coming out for October. So again, Warren Buffett doesn't talk about housing a lot, but I did find that article pretty interesting. Number 5, kind of a catch-all for the day. It looks like the student loan pause is back on. It seems like every time they extend the pause, they say, this is the last time. If you were somebody with a student loan, I feel for you. You've been pulled around a lot by the executives. But yep, the student loan pause has been extended for 6 more months. Don't know. Another thing to talk about, kind of our catch-all point number 5, is railroad strike. This is something we thought we averted in September. We thought there was a ratification or an agreement. Turns out that all of the labor unions did not ratify it, and if one doesn't, they all strike. We are potentially heading for a strike in railroads kind of early December. There's some talk of December 7th, some talk of December 11th. Call it the first half of December. That would be very not good. I frankly believe that the president or someone in his organization will intervene and push that delay post-Christmas. But again, this is something that is out there. And then lastly, catch-all number 5, let's talk about some earnings. We got some earnings here. We got Deere came out this morning. They beat top line, beat bottom line, and they said there are positive farm fundamentals. We had Guess, who missed on earnings and issued a weak guidance. Expect that stock to be down. HP beat top line, beat bottom line, but did announce layoffs that will occur over the next 3 years. Abercrombie and Fitch beat top line, beat bottom line, and said consumers are coming back to buy clothes for work and social gatherings. Nordstrom's beat top line, beat bottom line, but did not raise guidance. Their stock might be hit this morning. What else? A couple more, I think. Nope, that was it. And then lastly, a lot of you have joined my course, How to Get Started One Rental at a Time, in the last 24 hours. Thank you for that. But remember, part of the value you get from buying the course is not only the full day mastermind that's coming out, but you also get access to my private Facebook group. If you bought the course, remember, ask to join the private Facebook group called One Rental at a Time Works. You will be added. I personally will validate that you bought the course. You will be added, and then you will be around thousands of other people doing the work, sharing wins, asking questions. We are even now creating small groups. We are big enough now, thanks to Mark. We put together a spreadsheet where people are based, and we are starting to create little micro groups. This will grow over time. In the end, How to Get Started One Rental at a Time. It is an amazingly cheap course at $320 with everything how I started. All the bonus sections, all the deep dives. Now we are adding all of the mastermind, the full 8 or 9 hours of questions and answers. Those are being added over time. Buy the course now because once it is fully loaded, it will go to $400. Lastly, I do not do Black Friday. I don't put stuff on sale. So, hey, if you want to save some money, buy it. And again, if you buy it now, you can, the next 6 weeks, you can start learning your buy box, learning your market, learning average, and get ready to write great offers next week. So again, folks, thanks for all that you've joined. Do yourself a favor. If you spent $320, make sure you get all the value. Join the private Facebook group called One Rental at a Time Works. You must ask to join. I then will validate and approve. and then you will be around thousands of other folks. So again, folks, thank you for joining early, all 120 of you. Wow, 120 and only 17 thumbs up. What do I got to do? Do I have to just beg? It's Thanksgiving week. So give me some love, give me some thumbs up, like, subscribe, comment, and of course, have a wonderful day. Bye.